A very good afternoon, traders. It's Stu Naupan here, founder of Master Markets Illiterates Conference and the Traders Open Day. So, today we're back on Morning Glory once again. I did speak about cable actually in the London Investment Week Round the Clock Trader today online. And the webinar attendees were listening to me as I was talking about this trade as the 7 a.m. 1 hour bar had formed. And after that, we then went on to the next hour where I was presenting and I was analyzing this trade with them in real time. And I did tell them at that point of time as well that today I'm actually staying away from the trade. Now, what was the reason for that? What was the reason for that? The reason for that was that on the higher time frame, the bias wasn't strong. The bias wasn't strong. In fact, I did tell them as well how they can formulate their bias as well, okay, based on bar by bar analysis. In fact, in any case, as you can see from the bar by bar analysis, the bias wasn't very strong as of today. But however, the probabilities that I told them that stands out of this bars and how the yesterday's bar had formed was that first yesterday's bar had closed above its mid-range, which was here. I can show that to you on the screen over here, which was this bar here. It closed above its mid-range, as you can see. The close was above the mid-range, right? So that's this bar here. When it has done that, the next day, which is this bar, there's a 70% chance that it will take out its previous day's high. Okay, so that's what we did over there. So you can see that it did take out its previous day's high as such later on, and also it had come to 3-4 pips away from that. Whenever it comes to that, also there's a 66 to 70% chance that it would take out the previous day's high in the next 2 hours. Okay, and that's what I told them in live in real time in the webinar. And of course, as you can see, what happened next is that we had a massive red bar which did take out the previous day's high. Now, I just want to tell you what are the three things you can do when actually your bias is not strong. When your bias is not strong, just like today, the bias from yesterday was not very strong for intraday. So the three things you can actually do, the first thing is look, and I did tell them at the webinar as well, you look at fast targets, okay, fast target points. Look at fast target points and nearby target points. Definitely one obvious nearby target point was the 1300 level, okay, 130 level, because that's a big number. You see, however, our usual target usually for X amount of ATR range. But however, in such a day when the buy is not strong, look to get out of the market really fast. But most importantly, you must review your reward to risk ratio. Okay, if your nearby fast target only gives you, let's say, less than even 0.5 to 1, I would advise you or suggest that personally myself, I wouldn't even take it myself. All right. Right, that's the first thing you can look at. And do not hold very long. Do not hold a trade for very, very long periods. Okay, and we usually don't do that. Now, the another thing what you can do when the buy is not strong, look to trade other instruments. Okay, look to trade other instruments or other currencies or whatever that may be. Okay, since everything we teach here at Master the Markets is all price based, it can be cross transferred to any other market, okay, to any other markets, because it's raw price based studies, which actually nobody else really, as far as I know, really does. So other instruments, you can try other instruments, or the third thing you can do is step aside totally. Okay, step aside totally. Do not trade for the day, just like how I didn't trade it. Okay, it's a normally day. It's not really in our probability field such a trade. All right. Now, I would say that in terms of cable, I mean, personally, ourselves, we're very cautious in how we trade it, especially until the general elections finish. Okay, because as you can see, let me just show you right now. In terms of the daily time frame, there's one massive bar. You see, one massive bar, which is engulfing all the other bars at the moment. And now that's not good because that's a big market compression. Usually when you get that, bars range get disorientated. You get ranges forming in different ways and not the normal way pattern that you would expect it to. All right, so that's what we got to be careful of, right? Okay, I guess that's pretty much in this video. Go and take a step back and reflect on all these things I've told you and see how you can include it in your own strategy as well. These are the things that we talk about at Traders Basecamp, all right? Our flagship workshop where we spend 2 full days of immersion where we look into all these examples and really build you as a strong professional trader. All right, so as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.